Huddle Up team. I'm Tara. This is my husband, John. And we were talking, once again, all about saving money.
That's right.
And came across the topic of PMI insurance and what that is all about.
Huge opportunity for so many people.
I honestly didn't have a good grasp at all of what that is. And anyway, so what is it?
All right, so PMI.
Very good description, explanation, definition.
PMI stands for Private Mortgage Insurance. So this is for all you homeowners, all right? And especially if you've purchased a home, 2 or more years ago, all right? Mm-hmm. This is for you because we're going to save you some money today, so stick around. You don't want to miss this. Now, just in case you're brand new, we are John and Tara Thorman. This is Financial Success Coach, and our mission is to help you improve your relationship with money, fix your finances, and win your money game so you can achieve financial freedom faster. All right. So this is one way you can totally do that.
Yeah.
Private mortgage insurance does not benefit you one bit. It got you into the mortgage, okay, but they're charging you that insurance premium every month just to protect the lender.
Right.
Right?
Right. Because if you did not have...
Right. So if you didn't have 20% down when you bought your home,
right,
then they tack this on automatically.
And of course they tell you.
Yeah, of course. Yeah. But so many people have private mortgage insurance. Now that's for a conventional loan, right?
Yeah.
If you have an FHA loan,
there's a private mortgage for that too, but it's called a little bit different.
Yeah.
Different
MIP.
Yeah.
Mortgage insurance protection or something like that.
It's a little bit different, but you still have to have it.
A little bit different rules, but you're still paying on it.
Right.
And a VA loan is different again. But most people are in a conventional mortgage and they're paying PMI, private mortgage insurance. And guys, it's time to ditch that, okay? You can save a bunch of money every single month and put it back into your mortgage or put it back onto some high interest rate debt that you have, accelerate your debt payments, and save a ton of money in interest, okay? So if that's you, like, we gotta talk, okay? So seriously. So what I did was I ran a quick example. I got the clipboard, okay?
Okay.
So the example is a $350,000 home with 5% down and a 6.5% interest rate, okay? Now, PMI, the rates vary, and they vary based on your credit score, your amount of down payment that you're making, all these different factors, okay? But they will range between 0.5% to 2% of the original loan amount. Holy crap. So if you have a $400,000 loan and you got a 1% PMI rate, that's $4,000 a year. That's a lot of money.
Yeah.
Right? Imagine knocking that out and putting that back in your pocket. Like, that's a lot of money.
Yeah.
So in this example, we did a $350,000 home value with 5% down. So your mortgage starts out at $332,000.
Okay.
At 6.5% interest, we put in 1.25 for PMI. So right in the middle, right between half and 2 is 1.25. Over a 30-year amortization period.
Right.
We put in some closing costs because you're going to have closing costs when you buy a house. I put in 3%. I put in property taxes at 1.25%, home insurance at 0.5%. These are like pretty standard, common, percentages, right? So your area could vary. But when go grab your mortgage statement, right, and look at the numbers.
Yes.
Look at your numbers. But these are pretty common and average. So what happens is the monthly principal and interest is $2,100 roughly dollars. Okay, I don't want to get into specifics. Property taxes $364 a month, homeowners $145 a month, PMI $346.
Right. This is homeowners insurance.
Correct.
Not to be confused with this.
There's two kinds of insurance.
Yes.
Exactly right.
And you have to have them both.
Both. If you didn't put 20% down when you buy your house.
Right. The one is beneficial.
Obviously, homeowners insurance, that protects you if you have a flood or a fire or whatever, right? But PMI doesn't protect you. That protects the lender.
The lender. So just to be clear, there are two insurances, but very different.
Right. So
Sorry.
That
Oh,
$350,000 house, your payment a month is almost
wow.
$3,000. It's
Yeah.
$2,958. Okay, so PMI insurance. In this example, okay, this $350,000 home purchase at 5% down, you are making that PMI insurance payment for 123 months. 123 months at $346.35 a month.
So do the math.
It's $4,156 a year. You're going to spend $42,000 on PMI insurance that does not benefit you one bit.
Right. So how?
What a humongous waste of money, right? I mean, okay, great. It got you into the home.
Right.
And if you bought 3 or more years ago, that helped you because the market has blown up, right? So the value in your home has gone up dramatically.
Yes.
Yeah.
And that is a pro of it, is that you're able to
get in sooner.
Yeah.
Right. But guys,
we want to get rid of it.
We want to get rid of that as soon as possible because it doesn't benefit you, right? So here's the thing. There's some laws in place so that private mortgage insurance must be automatically removed once you hit a 78% loan to value, right?
Yep.
But that's based on the initial loan amount and does not factor in any kind of market appreciation. So, like in this example of the $350,000 home with 5% down, it's 123 months. That's over 10 years. 10 years of paying private mortgage insurance. Well, if you bought your home 3 years ago or 4, the value of your home has dramatically increased because of the market.
Right. So right now, right, we were talking about this last night.
Yeah. Right now, you could request them to cancel your PMI insurance. You don't have to wait 123 months,
right,
or whatever that number is.
Right.
You can call your lender right now and say, hey, I want to cancel my PMI insurance because I am below 80% loan to value because my home has appreciated in value so much because of what's happened in the market. And you can totally do that, except the lender is going to say, yeah, prove it.
Yeah.
Right?
Probably.
But it's totally worth doing. So there's two options to prove it to your lender. Number one is pay for an appraisal. Get a new appraisal, right? Now that's going to run you like $500 to $800 probably, okay? But there's a secondary option, okay? And this is amazing. It's called a BPO, Broker's Price Opinion. You know what that is?
No, I forget. But
you forget?
Talked about that too.
Yeah. A broker's price opinion is basically the opinion of a realtor.
Or your neighbor. I'm kidding.
Or your spouse. No. It's only... They got to be in the real estate business. Which could be your spouse.
Or your neighbor.
Yeah, or it could be. You're right. Broker's price opinion, BPO. It's got to be a realtor that does a market analysis. Right. It's got some local comps and whatever, and says, listen, based on what's happening in the market today, the reasonable market value or price of your home, if you were to sell it, is X amount of dollars. Based on what's happened the last few years, that's going to be dramatically higher than what you paid for it 3 years ago or more, okay? And just based on that alone, and the BPO you could probably get for $100. Yeah. Like maybe less, maybe a little bit more, but...
Well, just take them to dinner at Chick-fil-A.
Take out your favorite realtor for lunch or dinner,
breakfast.
Whatever, yeah. Well, get a BPO, okay? It's not going to be much money. $50, $100, $150 is not a lot of money. Get the BPO and submit it to your lender and say, look, here is the proof that the value of my home has appreciated so much that I am now less than 80% loan to value.
Right. And therefore, I should qualify.
I qualify for you to terminate my private mortgage insurance.
Yes.
And guys, that is money in your pocket. Yeah. Right? If you're paying $300 and some odd a month in PMI, right? We're talking $4,000 a year. If you're only 3 or 4 years into your mortgage, you've got 7, 8, 9 years left before that's automatically going to come off, right? You could save legitimately 20 grand.
Mm-hmm. Yeah.
Where the heck else? I said heck. Yeah. H-E double hockey sticks. Where in the heck else are you going to go save $20,000 with about, 15 minutes of organizing all this stuff? Nowhere. Okay? So do yourself a massive favor and look into this. Mm-hmm. Take care of this right away. It's money on the table, and if you don't do this, no one else is gonna.
Right.
Like, it's not in the best interest of the bank.
Right.
Right? It's in nobody's interest but you. So you have got to take action. You have got to drive this initiative, press this, and make it happen. But where else are you going to go save 20 grand?
I know.
This is real money coming out of your pocket. And if you do nothing, it's going to keep leaking out every single freaking month. $150, $350, $500. It depends on the mortgage amount, your credit score, all these other factors, but you're paying it.
Right.
Look at your mortgage statement and look at how much a month you're paying. Because you can totally change this and save a lot of money and apply that then towards some other high interest rate credit card debt, or paying off your car loan faster, or paying off your boat, or paying off your RV. What you got better use for that money? Like, that's your money.
Yes.
And right now it's just being wasted.
Yep. Sounds
right.
Good.
All right. You got anything else you want to add to that?
No, just it's something that you must have if you're going to do less than 20%, and you've given them a way to
save it.
Right.
Put it back in your pocket. Guys, we're going to do more topics on reducing your interest expenses. This is enormous, okay? The two biggest expenses in your life are taxes and interest. And they're not talked about. Right? We just take it. Bull-loney, okay? We're going to do stuff to fix this, because you can do things to reduce your taxes and reduce your interest expenses, and we're going to share them with you. So please like this video right now. Share this video with people that need to hear it. Anybody you know that bought a home in the last 5 years, the last 10 years, needs to see this video, okay? 100%, because they can start saving money like next month.
Be a great manager of your money.
Exactly. So we're so excited. We have been on this journey. So we're doing our Summer of Savings challenge, right? To find ways to save money or make more money. And it's been going awesome. We're so excited. We found about $6,000 and saved a couple $100 a month, and there's all this good stuff happening, but there's so much more, and we want you to take advantage of it too. And you gotta take some action. Think differently and behave differently, and you can save a lot of money. And oh my gosh, compounding works for you when you can eliminate expenses.
Right.
Yeah. So guys, thank you so much for watching today. We're super excited about helping you take advantage of this. Drop a comment. Be sure to like the video, share it, help other people. And if there's anything we can do, we're here. We want to be your financial coaches, right? You can benefit from some outside perspective, from some encouragement, from some motivation. Right. But the top performers in any industry, I don't care where it is, if it's in football, if it's in business, they all have coaches. Coaches will help you perform at a higher level, and that's what we're here to do. Help you win your money game and achieve financial freedom faster. So, with that, have a great week, and we will see you next week on our next video.